This is about the emergence of the new asset category in the name of SIF. Yeah. Now, this is something which is very new. I'm sure the audience would not have heard much about the long short strategies. What is SEBI trying to achieve by bringing something which is right in between an MF and an AIF? Consider us to be somebody who do not know a thing about SIF, and I want to learn from you what are SIFs and how to go about it.
So first of all, I'm happy you got in the regulator into this because you have to understand that this is regulator propagated. And we as an industry are extremely fortunate that SEBI thinks that mutual fund is the right domain to launch this product. It could have gone to anybody else, but they chose mutual funds. Just is a testament of their faith on our industry. Right. Here's the thing. From an asset manager perspective, and think about it. When you look at active investing, it is under the umbrella of categorization of funds. Our funds have been divided into various categories, and those category portfolios are practically also defined. What SIF does is gives us this ability to express our fund management capability in its truest sense. Now, the other thing that every fund manager will express themselves differently. So the beauty of SIFs at a fundamental place is all fund houses can be very different. Unlike, say, a large cap, which broadly has a similar portfolio construct, here portfolios can be completely different to each other. And that's the best part, that as a fund management team, we can express the portfolio the way we totally want. That's only the long side of the story. It also gives us the ability to give a hedge against the whole thing and sit on the opposite side to mitigate the risk. Now, the word is mitigate risk, but it can go the other way also.
It can accentuate the risk.
Right. So, risk is both ways. So, for investors at the beginning, and this is my humble request, is that when we look at the initial stage of the SIFs, it's better to understand the risk profile of the product. When you start investing, you think it is a return generation process. As you mature, you realize that it's a risk mitigation. And the closer the risk profile of the investment tool is to your risk profile, the better the investment journey. So at the birth of this, I would firmly request that people understand the dual side of derivatives, right? And then that's where your role comes in, is also check the fund manager's capability of managing derivatives.
Mutual fund investments are subject to market risk. Read all scheme related documents carefully.